How's it going, CPS team? It's your boy Nino here. I'm just gonna create a quick training video here for you guys on what are some of the few basic indicators that I use to make my trades and some of the basic strategies that I go about when doing our 60-second trading. So, really quickly, guys, what you would have to do is have open up your MT4 platform. Now, I'm gonna show you guys some of the basic indicators here that I use all the time. If you go to indicators list right now, you guys can put these indicators on. I basically use Bollinger Bands, parabolic SAR, volumes, and stochastic oscillator. Now, how do you get these? Really simple. You go up here, indicators, and you can just find them all over here and upload them, play around with some new ones, and see what you guys like the best. But I'm going to show you guys a couple of tricks here on how I catch reversal patterns and trends. So I'm recording this on the weekend, so obviously these candlesticks are not going to be moving right now, but that's okay. We don't need them to move. I'm going to show you guys based off of everything here that we have saved. So let me just set this up here. Now, if you look at the trends, the trends, usually the same thing always happens, right? The candlesticks and the price only can dip so much so fast until it reverses. And I'm going to explain to you guys some of the ways I catch these reversals. Also, what you would have to use, maybe a good indicator for you guys to have, is I got the candlestick cheat sheets on the website under training and candlesticks. So I want to explain to you guys a few things that I do here. So number one, Bollinger Bands. Bollinger Bands pretty much show how the candlestick movement goes, and it shows the basically where the trend is going and if it's outside of the trend or inside of the trend. Alright? And I'll show you guys how to use that. Volume. Shows how much volume of traders and money is going in. Right? You want to trade when there's more volume, because when there's more volume, there's going to be, the pips are going to move a lot more, meaning that you're not going to win by 1 or 2 pips, you're going to win by a lot more pips, right? You don't want to trade when there's not a lot of volume, because when there's not a lot of volume, it's very hard to create a pattern, right? So I trade when there's lots of volume. And then the stochastics here basically also shows a reconfirmation on where the market is going next for a short amount of time. So couple things that I look at over here. Well, very simple. If you look at the charts here, if we were to trade this right now, if this was a webinar and I was looking at these charts, I look at big candlesticks, big dips like this. All right, big dips like this are going to predict that there's going to be a reversal really quickly. So, for example, if we were trading this, each candlestick represents 1 minute. And I saw a movement in a candlestick like this, where it just dropped right down in one single movement, I'll probably shoot you guys a call and tell you guys to make a call right now on Euro Japanese, because most likely it's going to reverse, right? It's going to reverse for at least the next few minutes. And that's exactly what happened here, right? It broke through the Bollinger Band, so it went way above or way beyond the average movement. And if you look at minute 2 or minute 1, the candlestick opens up green above, and the second candlestick starts correcting itself. But if we took the trade anywhere here or here, we would have won that. All right, another one again will be this one. Moves all the way down. I would have called the trade here. By the end of the expiration of 2-3 minutes, we would have ended up either here or here, which would have meant a win for us again. Same thing over here. Look at this big candle. Dropped right down. Went back up. I would have took it somewhere at this point. Next candlestick over here is probably going to be going up. It's going to be a green candlestick when the market opens up. But I would have called a call over here, and we would have won again. So that's basically how I catch some of my trades when it comes to the long candlestick movements. Now, doji candlesticks. Doji candlesticks are really good as well to predict reversals. It's a doji candlestick. Well, let me show it to you right now. That would be, let's find some good examples for you here. So we passed by quite a few examples. Just want to see how many I can catch. All right, we'll start over here. So this is what I consider a doji candlestick. Pretty much, candles, the movement goes down, and then this candlestick right here is pretty much neutral, right? Meaning that wicks on both sides almost equal, and by the end of this candlestick, it didn't really move anywhere. If you look at this red candlestick right here, this is where the trade closed. The green candlestick opened here. You can see that I went down up to here, hit this point within the minute. It also hit this point within the minute, but at the end of that minute, it ended up pretty much being exactly where the last one closed. That means that the energy has pretty much slowed down over here, and the trend is about to reverse. So in a situation like this, I would most likely do a call over here, and obviously, as you can see, you would have won that, right? Look where the trend went. Look where the candlesticks went, all the way up to here it touched, right? Now, to be extra safe, where would I do this to, or what would I do to confirm this? Well, if you look down here at the stochastics, it pretty much also touched the very end. It passed that 20 mark, as you can see over here, meaning that again, it was a good chance that it was going to reverse, and that's exactly what it did at that point. It reversed, right? Another thing that you could have done to make sure that it was an extra confirmation, if you really wanted to be safe, was if you took this trade if it was outside of the Bollinger Bands, right? I'll show you another example. So as you guys can see, you guys can tell now, being able to read the charts very well, you can see how I'm calling all these trades and winning them almost all the time. It's very basic, simple stuff when it comes to strategy. The rest really comes down to money management and the emotions behind the trades. But let me show you a few other ones. Here again, look at this. I'll call that a doji candlestick too. So in down, 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 it touched the low of down here and the high point of right here, but it pretty much ended again at the neutral, at the closing and opening point, meaning that, again, it was going to reverse. And what happened? It reversed, right? Look up here. What happened? It reversed, right? Went down. Show you more examples. Let's see here. This is not a bad example too. It reversed for a short amount of time. It would have been enough for us to win. I would have took this trade right here too. Big movement outside the Bollinger Bands. Stochastic says that it's gonna, they pretty much, maxed out down here. It's gonna start reversing again. Exactly what it did. Reversed again. Would have took a trade there. Called it out. So as you guys can see, pretty simple strategies. One would be following the candlestick, the doji candlestick on reversals. The other one would be following big price movements in the trends, coming out of the trend, and pretty much, again, you can predict that that's going to be a reversal. And again, Make sure, guys, if you want to be super safe, that you get confirmation from your stochastics, get a confirmation from your volume, get a confirmation from your Bollinger Bands. With all these confirmations, chances are that the opinion that you formulate on where the candlestick and where the movement is going to be next in the next 2-3 minutes is going to be pretty high. But yeah, that's pretty much it for this trading video. I'll see you guys in the next.